Hey guys, what's up? Stock Retail here, coming back to you on Monday. Had a lot going on today. Certainly some real heavy price action. We're going to talk about that. A few court updates today and from the weekend. Going to talk about that too. And today will be a little more sharing just points of view from me. This is more of a quick recap of kind of some things going on today. A little less like deep DD, but I will share things from past DD and point to those. So on some of this, if you're newer here or missed anything, you could just go back and see the real DD on that. Otherwise, today we're just going to do a bit of a recap. Okay, so first off, the price action. Let's just get right to that. It was pretty big and pretty red, right? I've been saying all leading up to all of this going on to watch for volatility. So no surprise for me on that. Also talked yesterday in Sunday's video about the market cap combined of AMC and APE and why that was something I was looking at. So go back to that for more detail. Frankly, if you kind of tracked on that conversation, then today's price action mostly matched that. I will kind of fly by that idea, but again, more detail on yesterday's video. So here's the thought first. Let's revisit the thesis a little bit. For me, now this is, like I said, a little less DD today, more point of view. I ask myself, have the shorts covered? Well, no, we know they haven't. You can look at short interest, the cost to borrow, days to coverage, the average age of shorts, and the shares on loan. Just a little tongue-in-cheek there, called that SOL, because, hey, they might be. So shorts haven't covered. And honestly, if you go all the way back to June of 21, you can kind of argue that I'm not sure shorts really ever did cover. We're going to kind of revisit that in a little bit. But so that still matches the thesis, right? That's what I ask on these days where the price action doesn't really go my way, right? Like, does my thesis still hold? Are the reasons for me holding this stock still valid? And if the answer is yes, then check, I'm going to stay. So here I am. Is the business going well? So if shorts are over-shorting a company with improving fundamentals, that's a problem for them, not for me. I'm long. Q2, we saw profits. Q3 is actually tracking really the same as Q2 at the box office. At least that's my forecast, that we land about the same. I covered that in yesterday's video as well, too, if you want kind of a box office update. But meantime, if we're having the same box office that delivered profits in Q2, but remember, AMC paid off some debt in Q2 and then actually shared in the earnings call that they had paid off even more debt at the beginning of July, which is part of Q3, which means the interest payments are lower. Well, if interest payments are lower, that's less expenses. So you've got the same revenue roughly as Q2, which was profitable, and lower expenses, at least on that line item, than Q2. So I'm still projecting profits for Q3. If you're newer to my channel, generally my background is in forecasting. I've been very accurate on both earnings and box office forecasts for the past few quarters. Not a few, for the past quite a bit of quarters. Doesn't mean I'll be right again. A forecast is a future outlook, right? A future statement can be wrong. But I guess I'm just telling you, if you're new here, I've got some credibility in terms of forecasting and a track record there. And I'm forecasting profits for Q3 as well. And in the meantime, popcorn has been growing, right? If you think about how long popcorn's been in the marketplace, we're really just talking March and really actually in earnest April. April was when we saw the wide distribution at Walmart, and frankly, manufacturing was still ramping up. So you could even argue, really, AMC wasn't really broad until May. We're talking 3 or 4 months it's been in the market. During that time, in theory, you're gaining market share so long as you have a good product and word of mouth. Well, AMC definitely has both. If you haven't tried the AMC popcorn, it's really good. And I'm not making that up. Even my kids say that, and they do not. They don't mind teasing me and poking me a little bit. They don't give an easy, yeah, I like what you like, Dad, and they love it. So that's the popcorn in our house. Hopefully, if you're an ape, that's the popcorn in your house. But the point is, market share should be growing. Adam said maybe in a couple years, that could be $100 million top line business. So that is absolutely growing and doing well. So the point is, yep, the business is doing well. Shorts if not covered. Now let's talk a little bit about really this price action today. What's going on with buy interest? That's another thing I might look at. Well, we've had large order inflows the past few days. You can take a look at that. basically more large orders buying than selling. Retail is absolutely doing more buying than selling. You can see a lot of metrics on that. Some apes post that on Twitter. Looked like at one point this morning, like on Fidelity's app, AMC buys to sells was like 4-1, something like that. Look at the metric I mentioned yesterday in the almost said the call, guys. Sorry, it's been a very busy day at work, which is why today I'm just going to do a little flyby on the video. Yesterday on the video, I talked about OBV as a metric to show you kind of visually and with data that apes have not left. So apes have been staying, retail is buying, institutions have been filing buys for AMC, and the business is going great. Shorts are still incredibly high and costly to hold. All right, the thesis checks out. We're doing good, in my opinion. That's an opinion statement, right? So check me and decide how you feel about that for your own finances. So there's really only two things in my mind that can explain today. One is, I covered in detail yesterday sort of the market cap versus the total float. I see a lot of apes out there who maybe add the price of ape plus the price of AMC or something like that. I would really recommend don't do it that way. Instead, take the shares of ape times its price, take the shares of AMC times its price. You'll get the two market caps, combine those, and then you have to think about once they're combined, what might the price be, either at that market cap or if you think it will go up. I'm holding because I believe we can go a lot higher, and I showed a history of that in yesterday's video. So it's not just hopium, there's history behind that you still have to do some math on. Basically, there's almost twice as many ape shares as AMC. So if ape suddenly became the same price as AMC, or if together you combine them and added the price, your market cap is actually going up by a ton. I showed in yesterday's video, even just at $5 a share, the market cap is up like 80% or something. So take a look at that, think about that. It helps me think about what is going to happen in this reverse split and conversion. And today, honestly, kind of matched that. Now, the thing is, it was so aggressive and so, I'll call it kind of violent, that, it's still hard to explain. So that's the second bullet at the bottom here. And by the way, I'm just talking about what might happen going into the reverse split and conversion. I'm not talking about long term. I'm still here for a squeeze and here for fundamental improvements on the stock too. Still believe in both. So I'm just talking about what's in front of our nose when I talk about the $3, $4, and $5 kind of marks, stuff like that. Obviously we're here for a whole lot different price than that. So what do I really think kind of happened today? Yes, I think part of it is, and I'm going to talk about court cases here in a minute. So part of it is the market reacting to court cases and the fact that this thing is really going to happen, and brokers and market makers and wholesalers are having to kind of come to grips with, here we go, this is happening. But also, in order to get where they were going, I do believe they leveraged algorithmic pricing. You can just think through like high frequency nanosecond trading as well. There's wash sales, all kinds of stuff there. They're able to drive the price of stocks as they will sometimes. Dark pool trading, parking buys and dumping sells on the lit exchange, all the kind of things we've been talking about for a few years. Shorting, options manipulation, ladder attacks, blah, blah, blah. I'm not going to cover all that. But if you were to ask me, yes, I believe part of today was natural in that there's this whole market cap consideration. As the market is digesting, these two stocks are going to become one. But part of it is absolutely, I think, manipulation. And let's say just, computer-driven trading. And let's just look at that. I mean, what shape of a chart would you even call this, right? Like, go look up, I don't day trade AMC, I'm a hodler, but, if you're into trading, you've got all kinds of classic charts you would have, right? That are all kinds of classic patterns that help tell you the direction of a stock. This ain't one of them, right? So that what I'm saying is those straight lines down and then straight lines over, that to me has high frequency trading and algorithms written all over it. That's just a predetermined, we're going here kind of a thing. Unless all you apes woke up and just said, I'm dumping, and did it all together. Dump, pause, that's a little hard to pull off for 3.8 million people, right? So let's just focus on, or I'm going to focus, rather, my opinion, on the fact that retail buys to sells was like that 4-1 level. At some point, you're coiling a spring that's going to come back. That's my point of view. That's why I believe in the squeeze. don't need to cover that too much more here. So until shorts cover, I can hold. Shorts are holding with a cost. I'm holding free. Meanwhile, the business continues to improve. Go through all kinds of videos on that and all kinds of Reddit DD. It's all out there. Let's talk court cases for a minute. Love it. Basically, I'm going to show you two. So this is the one where just the cabal, the hornet's nest, rat's nest of shortened distorters who pretend they're fighting for you apes got shut down. This was the Supreme Court appeal. They tried to go above the Chancery Court with Judge Zern, and they tried to get the Supreme Court of Delaware to stop the thing from happening this week. But look at the bottom here. So case closed. I've shown you some screenshots. Basically, here's the Supreme Court's answer. Now, therefore, it's ordered this appeal is dismissed. Done. Case closed. I love that language. That was fun to see. Meantime, over the weekend, I had seen that Judge Zern had replied. Remember, there's another case. There's a case trying to get a settlement for the ape share class. Did a video on that a while back, too, when that one came out. Feels like it's a while back. It was just last week. But there was a reply from Judge Zern to one of our favorite short and distort crowd, good old Al, who, again, guys, if you're clicking on these people, I don't know what to tell you anymore. You're helping them. They're getting paid for that stuff while they're fighting our cause. So I don't know. But anyway, someone had forwarded me that Judge Zern had denied him again, and you can even just hear, I think, the disdain in her writing. Look at the first line. This motion eludes easy classification. I think what that's basically saying is, good grief, man, you are a fool, and I don't even know what to call your motion here. This is so stupid. In the meantime, basically she denies it. But if you look closely at how she denied him, she's saying the ape, the new case from ape, is basically getting thrown out. She's saying, look, everything was knowable, and this guy didn't object to the AMC settlement. You had your time to object. We all did. We talked about it. I made videos and tweets about it, and all you guys did too. We've all talked about that one for months. So she's just saying, look, this was knowable, too late. So we're going through. This stuff is happening, and let's just kind of buckle up for what's next. So speaking of what's next, I have said volatility from the moment the settlement was accepted, and sure enough, we are going to swing up, down, and sideways real hard and real fast all over the place, which is why hodl culture matters to me. If you're an outstanding trader and can make money off of that, more power to you, but that's just not me, and it doesn't match hodl either, so that's just not my thing and not what I'm going to talk a lot about on this channel. So volatility, the reason I'm bringing up volatility then is that's a time to manage my emotions, right? I'm not going to get too high when it's high green. I'm not going to get too low when it's deep red. I'm holding for something else that may take time. And so I'm prepared to take that time, as evidenced by the fact that I'm here more than 2.5 years later. I can wait. So also what's next? Now remember, Adam and the team said there'll be about a $25 million at the market share program that they will do from time to time. That, in other words, that's not all just getting dumped on the market. They'll do that over time. But that means once the split and conversion are done, we'll start hearing about, yes, the word is dilution, shares sold into the market, but the other side of dilution is value creation. I've covered that in quite a few videos. Definitely look. I think one in particular called what happens if Adam sells shares, something like that, maybe a week or two ago. My point of view is, and here's just an example. This just happened this last quarter, right? This is not even some ancient history. This is recent, where they spent $27.6 million, but they paid down $42 million of debt. If I told you, hey, will you give me $27.6, give me $27.60 and I'll give you back $42, you would take that every day of the week, and you understand that you just made money. So when they paid that off at that discount, that's making money. That's value creation. They sold some ape shares to get the 27.6, but in return, they paid off $42 million of debt. The difference between those basically adds value to our stock. So they added value, not diluted value. They did dilute as step one, but step two was value creation, and step two was bigger than step one. Again, go see that video. I'm going to go through it real fast now, counting on you guys to understand the point. So that's an immediate return, this sub-bullet under value creation. That saves, it's not only the immediate return, that difference, let's call that $14 million. That's an immediate return to our stock. That's an immediate return to the company's balance sheet and all of that, and the value of the company. But besides the immediate return, I also talked in that other video about how you've got interest payments on that debt. So that $42 million of debt at, let's say, 11% interest a year was $4.6 million a year in savings. That's earnings. When you cut your expenses, that goes straight to the bottom line. That is added earnings per year on just that one payment. Now remember, I also showed you he's paid off debt 8 out of the last 10 quarters. And then I talked to you a little bit about price to earnings ratios. Most stocks in our industry have priced in 15 to 20 years of earnings. So in that case, let's just call this 5 million for rounding here real quick. Say you price in 20 years. Well, that's $100 million of market cap that should get added to our stock if you had a 20-year price to earning. You can kind of play around with the math on that, grab your calculator and all that. So what I'm saying is, I anticipate next. I'm talking about what's coming next. We'll continue to have volatility. That's the first point. Yes, we'll have that dilution, but it's going to drive value creation, and we're going to see some really good things, in my opinion, that are going to set up the fundamentals to be even better, set up the value of the company, clean up the balance sheet. A lot of really good things if you're a long investor. Not so great for the shorts. I do anticipate that third bullet. At some point, we're going to start seeing buy to cover. That's a big point, because today I was asked by somebody on Twitter, not even really asked. They just kind of made the point like, hey, aren't the shorts sitting green now? Like if AMC is all the way down at, basically $3, there should be some shorts in green positions. Yeah, that's true. However, that's on paper. Okay. And if they're leveraged up the wazoo and they have all kinds of margin and debt, what do you got to do to close a short position? You have to buy to cover. So either they've got to go out and beg for more cash on loan to cover their position, or they have to just have the cash to cover their position. And the moment they start to buy to cover, we fly. So I don't really subscribe to this, the shorts are green. You're going to see a lot of FUD on that. But the answer to that is, one, they're still short. They have not covered. They're going to have to buy to cover. So they're going to have to come up with the cash for that, and that's going to drive price action like nothing you've seen. That's not dark pool action there. Just watch. At some point, I don't know if it's tomorrow, I don't know if it's next week, I don't know if it's next year. I never give dates or prices on this channel. But that is something that will happen as AMC continues to turn profitable and fixes the balance sheet. We'll have this value creation, point two, but we'll have that buy to cover action as well. Whether it's everybody, a couple of buddies, whatever it is, you're going to see it. I believe that. All right. You're going to see, obviously, the AMC shares settlement. You might be saying retail, duh, we know that. Here's why I'm covering that. Go back to that price action today. You tell me who'd be selling AMC when they know in a couple days, maybe not a couple days, right? The settlement actually finishes supposedly like the 28th. I believe that's the date that was in the filings. You could see my video that covers all the filings. Let's say the 28th, so we're coming up, in a week. So you tell me who would say, hey, in a week, I have a guaranteed 13.33% return because I'm going to get 13.33% more shares. Remember 1 to 7.5? Just do yourself a favor, divide 1 by 7.5 on your calculator or something. You're going to get 13.33%. So guaranteed return here in a week. Would you sell that? I'm not. So that's one piece there that tells me some of that price action is not retail selling. And, if that is essentially manipulated price action, then it's not real and it's going to recover at some point with that buy to cover, when that starts happening. And look, I haven't even talked about covering FTDs, cleaning those up. And then, excuse me, Obviously, the ape conversion is coming, so same note on ape. Who's selling ape when it's about to become AMC? I'm not even giving a percent return on that because who knows what it's going to land at. So I am very comfortable. I don't like the price action. I'm sure you don't. But for a whole lot of reasons I hope you're hearing, it does not change my sentiment. They can't sway me with this stuff. So we always said buckle up. So buckle up. Like that's where I'm at. That's what I'm telling myself. July was the biggest revenue month AMC ever had. We had recent dates. We had some days, we had some weekends, we had some weeks where Adam and team published that we had the highest food and beverage spending per person ever in 100 years, right? Vastly improved box office. Right now, my forecast has Q3 tracking at 38% year over year growth. We know there's liquidity problems in the market, which will eventually make it hard for shorts to hold their position. Exactly at the moment that AMC has access to cash, which is also that piece of banks have been letting AMC pay off debt at a steep discount. See Evergrande, see the US bank crisis, all of that going on. And we have extremely high shorts as AMC's business and capital structure have stabilized. I don't see a reason on this page for me to walk away. Whenever I get buying, dry powder, you know where it's going. So let's go.